If you are planning on opening up a high yield savings account, there's a couple important pieces of information that you should know that not a lot of people talk about. And I summarized these key pieces of information into 5 points, with the last point being a little sneaky trick that you can do to take full advantage of a high yield savings account. So without wasting any time, let's get straight into the video. Because you are using a high yield savings account, you're getting a lot higher rate than a normal bank would offer, which means you're going to be making a lot more income than a normal bank. This means that you're going to have to pay taxes on that income, and more specifically, anything that you make over $10. So after you make over $10, the bank that you're currently using for that high yield savings account will actually give you a form called a 1099-T that you will use to write your income when you do file for taxes. And taxes are a big thing that gets overlooked when you do want to open up a high yield savings account. Now, the second point to bring up, because it's a high yield savings account and because they pay a lot of interest, that interest is actually not set in stone, which means it could change over time. So if you want to go use a high yield savings account that has a 5% interest, that interest could change. It could go down to 3% or it could go up to 6%. You don't really know. So just remember that these banks may change their interest rates on a whim for any variety of reasons that the bank may have. The next point to bring up is that you could actually be losing out on potential income if you do invest all your money into a high yield savings account. Even though that 3 to 5% yield may sound attractive, the actual average returns of the S&P 500 are around 10% per year. Now, obviously, the S&P 500 will be a lot more risky than the high yield savings account, but it's a good rule of thumb to have to diversify your money and not have all your money lump summed into one of these areas. So you can have some of it in a high yield savings account, some of it in the stock market, some of it elsewhere. Just don't have all your money into one main area because you could be losing out on potential income. So the fourth point to bring up is that you want to have a high yield savings account that is FDIC insured, meaning that the government will back up your money up to $250,000 in the case of an unlikely bank failure. So if you have under that $250,000 limit in one of these savings accounts, your money will be completely safe. But if you have, let's say, $300,000 and an unlikely bank failure does happen, you're not going to be insured on that $50,000. So a good thing to do is to have multiple bank accounts. So you could have two accounts, one account having $150,000 in it, and the second one having the other $150,000 in it. That way, both of these accounts will be federally insured and that $300,000 will be safe. And this brings us to the last point, which kind of ties in that fourth point, is that you can, in fact, have multiple high yield savings accounts and you're not limited to just one. And this is really good for two reasons. The first reason is you can have different accounts for different reasons. So one could be for your savings account, one could be for your emergency fund, etc. This is really good to have because when you have a lump sum of cash, it can be hard to see what those funds are actually used for. So having multiple accounts with different funds in it can show you exactly what that cash is used for. Another good thing about having multiple savings accounts open is that interest rate, because it does change, you can actually transfer your money in between accounts to get that highest interest rate on your money. So for instance, if one of your accounts' interest rates does drop, which it can drop, you can actually move that money into the other account with that higher interest rate, which will then utilize the full effects of the high yield savings accounts, which will get you a bigger return on your money. Now, if you are going to do this, keep in mind that some accounts actually have withdrawal fees, which means if you take money out, you may have to pay a penalty, or some might have contribution limits where you have to stay above a certain limit. So just keep those things in mind if you are going to switch between accounts and have multiple accounts open. If you actually want to find some high yield savings accounts to put your money into, I actually made a video going over 7 really good savings accounts that you could have. Thank you so much for watching. I hope you're able to learn something, and I will see you in the next one. Bye.